Acknowledgements. Shri Salil Bijur, Additional DIT PNR 2 NADT Nagpur, as a mentor and course director, IRS Orientation Program Uttarayan 2024, and members of Group 18, Deepak Talreja, Shailashri A, Praveen Kumar Singh, Subir Das, and Jyoti Khanna. Welcome to this educational session on tax evasion through over invoicing and under invoicing in the context of Income Tax India. Now let's know what's over invoicing. Inflating the value of goods or services on an invoice is called over invoicing. The purpose is to transfer excess capital out of the country, inflate costs to reduce taxable income. For example, a company declares a rupees 1 lakh invoice for goods actually worth rupees 70,000. Over invoicing involves inflating the value of goods or services on an invoice. This practice is often used to transfer capital out of the country or inflate expenses and thereby reducing the taxable income.
Under invoicing, on the other hand, involves reporting a lower value for goods or services to reduce the amount of import duties and taxes payable. For example, a company declares rupees 50,000 invoice for goods actually worth rupees 80,000.
Mechanism of over invoicing is by way of fake invoices, overstated costs, offshore accounts, and transfer pricing manipulation. Let's explore the mechanism of over invoicing. These include creating fake invoices, overstating the costs, using offshore accounts, and manipulating transfer prices.
Under invoicing mechanisms include collusion with supplier for buyers, false declaration, using intermediary companies and misrepresenting values in custom documentation.
Identifying over invoicing by way of finding out discrepancies in pricing, comparison with market rates, analysis of financial statements, and audits and inspections. Identify over invoicing, look for discrepancies in pricing, compare with market rates, analyze financial statements, and conduct thorough audits and inspections.
Similarly, identifying under invoicing involves looking for red flags in import export declarations, conducting customs valuation checks, comparing with market rates, and analyzing shipment documents.
A case study on over invoicing, description of which is a large multinational corporation was found to have over invoiced goods exported to its subsidiary in a tax haven. This was identified by finding out discrepancies which were found between the invoice values and market rates during a routine audit. Legal actions. The company faced legal action under Income Tax Act, Custom Act, and resulting in fines and penalties. So, outcome, the company's practices were corrected and stricter internal controls were implemented to prevent future occurrences. In one notable case, a multinational corporation over invoiced goods exported to a subsidiary in a tax haven. Discrepancies were identified during an audit, leading to legal action and significant penalties. The company subsequently implemented stricter controls.
In another case, an importer under-invoiced luxury goods to evade customs duties. This was detected by custom officials, leading to prosecution and FT penalties. This case underscored the importance of vigilant custom checks.
The impact on economy. Tax evasion through over-invoicing and under-invoicing has significant economic impacts. It results in revenue loss for the government, distorts trade statistics, negatively affects market competition and fosters black money and corruption, and ultimately results in tax evasion for the income tax department.
Income tax officers play a crucial role in combating tax evasion. This includes vigilant monitoring of transactions, coordination with customs and other departments, conducting audits, and pursuing legal action against offenders.
Preventive measures against tax evasion, which include strengthening regulatory framework, increasing transaction transparency, providing regular training for officers, and leveraging technology and data analytics.
The government has launched several initiatives to combat tax evasion, such as the introduction of GST, Digital India, and e governance, international cooperation, and recent amendments in tax laws.
Now, let's recap of key points. Importance of addressing over invoicing and under invoicing we have gone through. The role of income tax officials in curbing tax evasion, then call to action for vigilance and adherence to law. In conclusion, over invoicing and under invoicing are serious issues that impact the economy. Addressing these practices is vital for maintaining fair taxation. Income tax department must remain vigilant and enforce laws to curb tax evasion.
The practice of under invoicing and over invoicing are some of the ways people evade taxes by deliberately misstating the actual value of different transactions. These activities lead to lower revenue for governments, leading to distortion of market competition and loss of credibility in financial institutions. Although Income Tax Department has made attempts to identify such issues through technology and collecting information from other government agencies, but there is need for continuous checks as well as educating the public in order to effectively fight against tax evasion. The Income Tax Act has prescribed penalty provision for such tax evaders. The tax evaders are also prosecuted as per Income Tax Act 1961. Thank you.
Thank you for participating in the session. We appreciate everyone's commitment to combating tax evasion. For more information, please contact us at www.nadt.gov.in, NADT Nagpur.